We are very fortunate today to have a speaker who is a rising star in terms of pushing on the frontiers of knowledge, working on very interesting topics. And we very much welcome the stars, the rising stars, to be part of this discussion. And today we have Ruth Grace MBANGO Ngea. And Ruth is a doctoral candidate at the École Nationale Supérieure de Statistique et Économique Appliquée, or NGEA. Now, NGEA is a very well-established institution. It is indeed a World Bank Center of Excellence based in Abidjan, dedicated to high-level research and training for statisticians and economists for Francophone Africa. NCEA is also strongly connected to a Center for Global Finance at SOAS. In fact, we do have a Memorandum of Understanding, MOU, signed between NCEA and SOAS, facilitated by none other than Professor Yusuf Somare, who is also here in the audience. So thank you, Yusuf, for making that introduction, and also with the director, who may be able to join us as we go. And of course, including Pierre, who was at that meeting when NCEA and Center for Global Finance started working together. But back to Grace. Grace is a very prolific researcher. She's a graduate of the University of Yaoundé too, in Cameroon. Her research is wide-ranging, but at the moment it tries to interrogate contemporary issues in the fields of corporate finance as well as international finance. Her ongoing research, from which the paper that she's going to share draws from, is being supervised by Professor Yusuf Somare at Laval University, but as I mentioned, who is also affiliated to ENSEA. And the research focuses on the impact of remittances on SME access to finance and the role of financial development. Indeed, that topic is integral to the key areas of research for Center of Global Finance, being able to focus on small and medium enterprises and where remittances can make a huge difference. So, Grace, you are most welcome to the seminar. Please feel free now to start the presentation and share your paper with us. Just before you start, in terms of the housekeeping, I can say for us to be able to communicate properly, please mute your microphone if you are not speaking. And of course, you can put on your camera so we can see you. And then we can, if you have any comments, please post these comments initially into the chat room. And we shall then open the presentation for discussion after Grace's presentation. So for now, Grace, please go ahead. Commencez, s'il vous plaît.
Thank you very much, Professor Victor, for the opportunity that you gave me to present at this seminar. I would like also thank Professor Isusu Mare for his support. It is a real pleasure to me to present my work at this seminar. And my name is MBANGO Ruth Grace, and I am a PhD student at ENSEA. The presentation that I want to do this afternoon is about effect of remittance on small, medium enterprise access to finance, the role of financial development. And my presentation is around 3 main points. introduction, variable data and methodology, and resolve. In terms of context and motivation of the paper, entrepreneurship has been considered for several decades as a lever for the development of a country because of its ability to stimulate economic activity and its contribution in terms of job creation. Several economies continue to promote the development of entrepreneurial activity. The promotion of entrepreneurial activity consists in reducing the constraints faced by entrepreneurs. There is sufficient evidence to suggest that entrepreneur financing controls are one of the main obstacles to entrepreneurial activity. Developing countries are examples of countries where access to finance for entrepreneurs and mainly small and medium-sized enterprises is limited. In developing countries, small medium enterprises represent around 19% of a company and generate more than 15% of unemployment. The existing literature maintains that the constraints on small medium enterprise access to finance in these countries are largely due to the specificity of small medium enterprise, but also to the behavior of financial intermediaries. Regarding small medium enterprise, in addition to the capital weakness, it has been noted that these entrepreneurs hold crucial information necessary for accessing the risks associated with their activity. And for financial institutions, the low level of financial development in developing countries has been noted as an obstacle to small medium enterprise access to finance. It has been noted that financial institutions in this country remain in risk reduction perspective by demanding huge guarantee for small medium enterprise, which generally do not have enough guarantee to offer. Local financial institutions are therefore well placed to collect and, if necessary, provide the information needed by small medium enterprise for an accurate assessment of performance risk. Similarly, they are ideally placed to consolidate investment opportunity in small medium enterprise into financial instruments that can attract international investment funds and encourage them to invest on a large scale and in this category of business. This may include converting debt into equity or exploiting non-traditional sources of financing such as remittances. The transformation of migrant remittances into a source of financing for the development of their home country is pay attention of several research. Migrant remittances are money that a migrant sends to their home country. These funds are intrinsically important in terms of stability, cost rate, and share of GDP. According to the World Bank, these funds are the second largest financial flow after foreign direct investment in developing countries. In addition to the rapid growth, most studies view remittance as a stable and countercyclical source of finance due to their increase in time of crisis. Theoretically, the relationship between remittance and small medium enterprise access to finance emerged from the development of a corporate finance theory initiated by Modigliani and Miller. Modigliani and Miller proposed the theory, according to which under perfect market conditions, the investment decision of firms depend only on the capacity of the investment project to generate positive net present value, while the financial structure of the company and type of finance used do not influence the investment decision. By favoring the order of preference proposed by Meyer and Malu, two channels through which migrant remittance affect entrepreneur access to finance can emerge. The first channel is the direct channel of self-financing. Remittance can provide direct liquidity to recipient entrepreneurs, which financing need and allow them to self-financing their invest. The main implication of this channel is that when entrepreneurs face credit constraints, their investment decision only depend on the variation of your income caused, for example, by the receipt of remittances. The second channel is a debt channel who highlight the role of financial development and which assume of financial literacy induced by receiving remittance. This assumption posits that once informed and exposed to the service provided by the formal financial sector, the more recipient of remittances will want to use formal financial service. More financial institutions will want to offer their service to community that receive remittance. In addition to the use of target financial literacy program, it has been noted that the flow of remittance per se can induce better financial literacy among recipient community. The literature shows that financial development through appropriate financial system facilitate capital accumulation and stimulate the availability of a credit for entrepreneurs. Levins highlight various countries according to which financial development affect entrepreneur access to credit. For example, via a better exchange of goods and services, an increase in accumulation and capital allocation, human resource management, and cooperation in governance, mobilization of saving and risk control of the company to be financed. This implies that higher capital accumulation due to remittance increase the resource of financial institutions. Likewise, a well-developed and technological sound financial system result in efficient mobilization and allocation of remittance, minimize information asymmetry and transaction costs, minimize risk, and make their funds available to entrepreneurs. Empirically, some studies show that remittance constitute an alternative way to finance invest. Studies have questioned the condition under which migrant funds could impact access to entrepreneurial financing and use the financial literacy hypothesis. For example, the study of Williams and Ambrosio and Kukuya in 2016. Other studies argued that the effect of remittance on population access to finance is conditioned by its effect on financial sector development in the developing country, since remittances are accompanied by greater financial inclusion. Among these studies, Star in 2019 noted that remittance improved the efficiency of the financial sector, increased the number of deposit accounts for the safekeeping and any temporary excess cash from remittance, and allow financial institutions to have more resources. But despite this argument, the literature is almost silent on the relation between remittance and small medium enterprise access to finance in developing countries, and the joint effect of remittance and financial development on trade access on small medium enterprise in developing countries remain indeterminate. Our study attempts to fill this gap. The main objective of our study is to determine the effect of migrant remittance and financial development on small medium enterprise access to finance in developing countries. More specifically, our study seeks to determine on the one hand, the effect of remittance on access to finance for small medium enterprise, and on the other hand, the joint effect of financial development and remittance on small medium enterprise access to trade in developing countries. The contribution of this study to the existing literature is dual. Firstly, our study attempts to provide a macroeconomic analysis of the effect of remittance on access to finance for entrepreneurs using data from small medium enterprise of the World Bank Enterprise Survey. Secondly, the relevance of this study also rests on the importance of small medium enterprise access to finance for stimulate economic activity that can improve living standard and reduce poverty rate in developing countries. The recent report of United Nations Conference on Trade and Development indicate that financial institutions and local financial mechanisms have a direct role to play in creating and allocating sufficient and reliable sources of finance in developing countries, and to assure that financial resources have a wide reach, both geographically to reach underserved regions and the sector level to benefit underfunded community, underfunded activities such as small and medium-sized enterprises. This study will help identify the potential effect of remittance as a source of finance from small medium enterprise and will enable government to consider financial sector reform strategy to strengthen the effect of remittance on the financing of entrepreneurs. We use the following probit regression reporting marginal effect to assess statistical and economic significance, where Finn's SME is one of the two binary variables described in the next slide. Remit represents remittance, FinDev represents financial development, Remit-FinDev represents the trust term between remittance and financial development. This term was introduced to determine the joint effect of remittance and financial development on small medium enterprise access to finance. And X represents a set of variables that capture the theme characteristic. To explore the relationship between remittance, financial development, and small medium access to finance, we combine data on small medium enterprise in around 100 developing countries from the Enterprise Survey database and those from World Development Indicator of the World Bank. For each country, we use all the Enterprise Survey available over the period 2005 to 2019. Following back, we use a probit regression. We apply also a Ekman two-state method to correct for selection bias on the 3D access variable. The application of Ekman model is justified by the high number of zero who represent a small medium enterprise who do not have access to 3D. Consider it if we only work on the subsample of positive value, the estimate of the bias introduced by the censor must be corrected. Zero indicates that the small medium enterprise does not have a line of credit with a financial institution, but can also include small medium enterprise that do not apply for credit. The objective of this method is to arrive at a correct estimate to the inverse of the mean ratio to mitigate this bias and to verify whether the negative effect of remittance also extends to small medium enterprise that do not apply trading. We use two binary dependent variables to measure for small medium access to trading. The first variable, access to trading, indicate that whether a business have a loan or not. Small medium enterprise will access whether they have a line of credit or a loan from a financial institution. Access to trading take the value 1 if the firm answer yes. Otherwise, access to credit take the value 0. As this variable only indicate a result but not consider whether the company need financing or not, we construct a second binary variable, financial constraint, which take a value 1 if the business does not have a loan and have not applied for a loan because the interest rate or collateral requirement are too high or other elements of a low conditionality are not favorable. We designate a business as financially unconstrained if it has a law or indicate that it does not need it. This is an objective measure of small-medium enterprise access to finance that has used in literature. The second variable, our interest variable, is remittance, who are measured by the net remittance flow received, which include personal transfer received and compensation of employee. Personal transfer include all current transfer between resident and non-resident individuals. Employee compensation refers to the income of frontier, seasonal, or other short-term work who are employed in an economy where they are not resident, and of resident employed by non-resident entity. The data are the sum of the two elements defined in the sixth edition of EMF Balance of Payment Manual. Financial development measured by the ratio between the total credit provided by financial intermediaries to the private sector and the GDP. We chose this variable primarily because it is a measure of financial intermediary development that isolates credit issued to private sector as opposed to government and public enterprise. And the firm characteristics, including size, age, and type of ownership. Regarding the size and age of the firm, the literature proposed that the smaller and younger firms are more financially constrained. It was noted that information asymmetries are likely to be particularly important for small and newly established business, since these businesses have not had sufficient time to build long-term relationships with financial providers. We also test whether the ownership type can explain small-medium enterprise access to finance. We think that multilateral or foreign firms are easier access to international sources of financing and are therefore expected to report lower obstacles to financing. Public firms are also expected to report fewer barriers to financing, as in many countries, these receive direct government budget support and preferential treatment from public financial institutions. We also include binary variables describing the type of organization of each firm. The literature has proposed that the information asymmetry of a listed firm are on average low due to the listing and reporting requirements of stock exchange. We also expect listed companies to be faced with lower financing barriers, with simpler form of organization such as sole proprietorship might find it more difficult to establishing credit history and accumulate collateral that will allow them to borrow from external sources. We examine whether receiving a remittance improves the likelihood of small-medium enterprise accessing finance in developing countries. And we use a two indicator of small-medium enterprise access to finance, access to trade, and the financing constraints has defined above. Column 1 and in table 4, column 1 to 3 and column 4 to 6 present the result of our estimation using respectively access to trade and the financing constraint as dependent variable. We will regress all small-medium enterprise together in column 1 and 4 before testing the robustness of our result by running estimates by company size. The result in column 1 show that an increase in remittance reduces the likelihood of small medium enterprise access to trading. In addition, the share of small medium enterprise receiving loan is lower in countries benefiting from more remittances. The results are also important economically. A marginal increase in the share of remittances associated with a 0.03 lower probability of small medium enterprise obtaining a loan. This suggests that a higher inflow of remittance is not associated with an increase in the likelihood of small medium enterprise having access to trading. The result of column 2 and 3 also show that this relationship is statistically and economically weaker for small side film, which is stronger for medium side film. Our results in column 1 to 3 also show that the effect of financial development on the likelihood of small medium enterprise having access to trading is negative. We also cross remittance and financial sector development to measure the joint effect. This product is positively and significantly linked to small medium enterprise access to trading. These results confirm that the impact of remittance on access to trading for small medium enterprise is a function of financial development. These results reveal that a marginal increase in the share of remittance as the financial sector is well developed increase the likelihood of small medium enterprise obtaining a loan of 0.001. Regarding small medium enterprise characteristics, our results are in line with our forecast. We notice that the age of the small medium enterprise has a positive and significant impact on his likelihood of accessing credit. Access to credit is negatively and significantly associated with small firms. These results are consistent with the entrepreneurship literature, which posits that young and individual firms face more borrowing constraints due to the lack of collateral. Column 4 to 6, using our alternative dependent variable financial constraint confirm the above result. In column 4, the share of GDP entered the relationship significantly and negatively. A marginal increase in the share of GDP associated with a 0.01 lower probability on small medium enterprise being financially constrained. Our study examined the relationship between remittance and financial development and small medium enterprise access to finance. We found that the increase in remittance in developing countries reduced the likelihood of small medium enterprise access to credit. We discovered a positive joint effect of remittance and financial development on the likelihood of small medium enterprise access to credit. We conclude that channeling remittance into financial sector of developing countries lead to greater availability of credit for entrepreneurs, but the low level of development in the financial sector of countries of the study does not alleviate the credit constraint of small medium enterprise. These results reveal two interesting facts. This is a level There is a level of financial sector development from which its effect of small medium enterprise access to credit chain and the reception of the remittance associated at better financial development improve access to credit for small medium enterprise. It seems that the level of development of the current financial sector in the country under study does not permit remittance to have a positive impact on the volume of credit granted to small medium enterprise. This finding partly justifies the negative effect of remittances on the likelihood of small medium enterprise to trade it defined above, since if the financial institution involved in the transfer of migrant funds fail to develop and make financial products available to small medium enterprise, credit will not increase. Therefore, measures that will improve the development of financial sector must be implemented in the country under study. For example, the government should allow migrants to hold foreign accounts with local banks to grant them permission to make deposit into their account even outside the country. Thus, commercial banks and other agents in the remittance market may find it useful to develop customer products accessible to small medium enterprise. Thank you very much for your attention, and now wait for your question, contribution, and so on. Thank you very much.
Thank you, Grace, for presenting such an interesting and excellent paper, for sharing your research with us, and for presenting the work very clearly. I know that some of your work is presented in French, but you presented it in English very well. Excellent. Um, in many ways, this work is a breakthrough, especially in presenting the micro farm level elements of the impact of remittances. As Grace correctly observed, much of the empirical literature focuses on macro dimensions, aggregate dimensions of remittances, but this explores what happens at the corporate level, and indeed has been motivated by the corporate finance literature, which is important. But also the emphasis of small and medium enterprises, not only in terms of financial sector development, but also in terms of creation of jobs, creation of employment. And the remittances factor is very important. In some of the literature, some scholars try to look at the remittances from the diasporas, especially those papers focusing on Africa, but also diasporas from the many regions of the world. And I guess that at one point it could be possible to distinguish the types of remittances and whether they are diaspora driven or driven by any other type of remittances that targets have a destination in developing countries. Indeed, in some of the papers, we've seen a lot of work that looks at remittances with various impacts, the marginal propensity to remit, and the impact on consumption. This is a breakthrough in terms of looking at SMEs, not all businesses. So they basically do the remittances enable entrepreneurs to start with the small firms, startups, and also to help SMEs graduate from one stage to another. The other dimension I like about this paper is the exploration of the business environment, the conditions here captured by the level of financial development. And indeed, the model used to capture the marginal effects does the job with a large data set, a comprehensive data set covering so many farms, thousands of farms, and also able to go beyond to about 15 years annual observations. That's a huge panel. And then able to look into the type of constraints. So regressions on the access to finance, and then on really the constraints, addressing the constraints of a corporate investment. And indeed, the work is much more reliant on the databases available. And so some of the issues like how about the applicants who were rejected, the credit risk may not be treated in this kind of perspective unless there are questions in the national surveys that answer that question. Or indeed whether the doing business report is able to capture some of the interesting results. Initially, in the presentation, I thought that there was a puzzle in terms of remittances reducing SMEs access, but then I see that GRACE include an interaction term, which helps to give the message of the important role of financial development or important role of the business environment in the local market to make remittances work in terms of helping SMEs impact access to finance. Right. So, but now we open the discussion to the floor, and maybe you can stop sharing, Grace, and then I will look into the chat to see some of the comments. Some of the comments in the chat are mine, but I will ask Meng to look at the comment in the chats. In the meantime, I will take the questions from the floor. The first hand up is by Dak. Dak is a professor of practice at SOAS, University of London, and also a head of a department at ODI London. So Dak, you have the floor.
Thank you, Victor, and thank you, Grace, for a really great presentation. Very much appreciated, and some really interesting findings there. I suppose the interaction term between financial development and remittance, of course, is a positive one, which is an interesting one and an important one. I suppose there's still a bit of a puzzle around the fact that financial development as such doesn't help with access to credit. So I think that that may need a bit more further explanation. But I suppose, yeah, what you pick up and what you argue for towards the end is that there are not enough specific products targeted to the SME sector by the banking sector, so that even though there is increased credit in the banking sector, because there's a lack of products specific for the smaller firms, the smaller firms don't gain. My question is a bit of sort of, have you considered, or can you consider in the future, the question about how remittances are generated and provided? And so I come across quite a lot of initiatives by leaders, by governments that are trying to tap into their diasporas abroad. And they think about diaspora bonds, they think about specific instruments to really tap into diaspora finances, rather than leaving it up to sort of the market on its own, and just say, well, actually, we hope there's going to be remittances. We hope that financial sector development is going to be advancing at pace, and the two together should lead to more access. So perhaps could you think about extending research or thinking about this, about how whether targeted initiatives at the diaspora to really channel finance into segments of the economy, for example, SME sector, have been beneficial in reaching out to particular segments of the SME population. And I know that may not be as easy to get data from the World Bank, but maybe you may be able to get data on the extent to which there are targeted initiatives available in particular countries over time, and you can maybe use that variation. I would be really interested in that, because if there is anything that can tell you that that would be helpful. Then, of course, then all these initiatives that leaders are going abroad to tap into the diaspora actually pay off, and think about this, and there's a market. So we'll be interested to hear your views on this.
Yeah, thanks, Dak. Before I ask Grace to respond, thanks, Dak, for this observation. In fact, this is so helpful because you are now wearing an academic as well as a practitioner hat. There is a policy dimension to it. What you bring in the discussion is something that would appeal directly to policymakers. In other words, if one discusses, never mind whether get the data, maybe the data would help, but just discussing how remittances are generated and provided, and especially dealing with the traditional instruments that governments are trying to use to scale up these remittances, that helps a great deal. Because if the data is not there, still can be flagged up as an interesting area for further research, because then it will equip us. It will enable us to talk to policymakers and say, okay, look into instruments, because that may help the financing of SMEs. So thank you very much, Dak, for that question. Let me go back to Grace and get you a response to Dak's intervention.
Okay, thank you, Professor Victor, and thank you, Professor Dak. And I think that the point that you mentioned is so important, because when I read in the literature, I see any paper who have tried to study why remittance can stimulate a diaspora bond. But now, with a problem of a data that I have, and mostly at the micro level of remittances, I will try to extend my work and to see that aspect that you have mentioned. I think your intervention is more a comment and contribution than a question, and I will try to support you. Thank you.
Thank you. Okay, thank you, Chris. Yeah, I think a very important point, and which definitely will enhance the quality of the paper, and can be added in the discussion as well as the avenues into policy. Richard, Dr. Richard Alexander, a colleague at SOAS, University of London. Richard.
Thanks, Victor. Yeah, my question was also from a policy perspective, and that is, I was thinking as you were talking about the impact or not of remittances, and but also the strong link between the growth of SMEs and financial development in developing countries, made me think about the constraints on the remittances themselves from the developed country end, which is where a lot of the diaspora sending remittances to developing countries is located. And if you look at developing countries, you find that there is a combination of financial regulation, such as counter-terrorist financing, but also to a lesser extent money laundering, the de-risking by banks that prefer not to touch categories of customers that they see as risky, the fact that international financial transfers, if you can get access to banks in developed countries, international transfers are expensive. All of those either restrict the ability of the diaspora to make remittances, or commonly encourage them to use informal channels. And if they use informal channels, the remittances may not end up in banks in developing countries in the first place, which may in turn have an impact on banks in developing countries' ability to make loans. So given that, And given that we know that the growth of SMEs is important for financial development in developing countries, does that have implications for what entities such as the World Bank might encourage in terms of the practices and approaches of banks in the developed world? And I'm not suggesting necessarily that could feed into your paper, but aware that the institution where you're based is linked to the World Bank, I wondered whether this is a message that needs to be sent back. I'd be happy to talk to you later online by email about other colleagues that are working on the impact of de-risking, but I wondered what your thoughts were.
Thank you very much, Richard, for those observations, and especially for mentioning some of the institutions that are very actively following up the issues of remittances. And I think the World Bank,
or at least should be.
Okay. Yes, and the World Bank is one of them. In fact, I think the World Bank, together with the African Development Bank and a couple of us, had started something called the Institute of Remittances. Okay, so Grace, please go ahead.
Okay, thank you, Professor Richard. And I think that point also is important, because when in my work I use remittances, I use only remittances, a secondary data. That remittances, I suppose, is channeling by a institutional financial institution, and I think in the data that I use, we can consider that remittance has a formal remittances, but I know is a large part of remittances that will send with informal channel. But now I if I have data who will leave this informal channel, I can use it. And when you speak to for a work of the World Bank or the financial institution, I see that they have a large function in the fact that remittance can impact small medium enterprise. But now my work is ongoing, and I'm studying and I'm search if I can have another political implication of my paper. But I take your intervention also like a contribution, because you tell me I can write you in your email, and I think you can help me to improve this paper. Thank you.
Yeah, thanks, Ruth, because I'm aware of not just myself, but new colleagues being increasingly frustrated at the de-risking practices of banks in many developed countries. And it strikes me that has a direct impact on things you're working on. And maybe we could get together to work out a policy response.
Yeah, thank you very much, Richard, for that offer. And also, I appreciate the point you made about distinguishing between the informal and formal channels of remittances. I think definitely Grace can acknowledge that, even a footnote in the discussion, to say that we know there are formal and informal, and actually to then clarify that the data is mainly drawn from formal sources of remittances. So it may underestimate at least by 10% or even by 2%, leaving out some of the informal remittances, just which improve the whole quality of a perspective of looking at the paper. So Richard, thanks once again. Thank you very much. I'm not sure whether Andrew wanted to come in, because I could see some movement on his our channel, but but let me now first call upon George Okello, and if Andrew, then Andrew will come after that. Okay, George, you have the floor.
Hello, thank you very much, Peter. Grace, thank you for the presentation. The presentation shows clearly some of the strategies that can minimize the financial exclusion of SMEs in developing countries. Now, I'd like to share something which was actually a bit touched on by Richard. Probably you will find that from the formal perspective, the World Bank, the World Bank is majorly concentrating on the formal financial development. But for example, in Uganda, you find that the Financial Institution Act, which was brought into force in 2017, now recognizes the activities of both the informal sector and the semi-formal sector. Now, what is happening is that you will find that people who live in actually the diaspora directly now remits money to their relatives on their mobile phone. Now, in Uganda, what is happening is that majority of the micro, small, and medium enterprises access money from the informal sector. Now, what is happening? They have what we call the village kind of arrangement, where we have the Village Savings and Loan Association, which has emerged to be very strong in promoting financial inclusion for micro and small enterprises. Now, when you look at your findings, you might rethink and see that the reason as to why remittances could be having that kind of effect on access to financial services by micro and small enterprises, especially in developing countries, is due to those informal kind of financial arrangement, which has emerged to be very strong. So what I would think is that the data set that you're using from the World Bank has some gaps, because it's exactly not describing what is happening in the developing country perspective. For example, I clearly see even publication from West Africa, like in Nigeria, they have also those, I don't know, it's called Susu, those village kind of arrangement, where you will find that they have greatly contributed and spurred the growth of micro and small size enterprises. So this kind of paper could clearly bring out and spell this kind of gaps in the data, because for it to attract the attention of policy in developing countries, it is actually very prudent for you to show that the informal sector clearly plays a great role. Now, for example, commercial banks in Africa, like in Uganda, they leave out the micro and small medium-sized enterprises because of certain kind of information on their ability to avoid the default after borrowing from the banks. So it would have been better for this kind of paper to clearly state somewhere, probably to explain the reason of this kind of findings. And I also would like to think that the World Bank, because you're now working for, you're based at a center that is connected to the World Bank, why should the World Bank ignore the activities of the informal sector, which has turned out to help the poor men or the people at the bottom of the pyramid in developing countries? So this must be reconsidered, because you can clearly see the effect of SMEs. So probably that is my kind of view. So you might need to factor in that. And then also you look at issues of the digital financial services, the DFS, or fintech, the growth in the fintech technology, which actually enables the beneficiaries of the remittances to directly withdraw their money, which might not be formal. So actually, the World Bank data underestimate this. So these are some of the contributions from the point of practice and what is happening, for example, in Uganda. Thank you very much.
Thank you, George. As usual, you have a group of very rich comments and suggestions extending the arguments also to fintech and applications. Much appreciated. So let me call upon Grace to respond or appreciate your comments.
Okay, thank you, Professor, and thank you also for this intervention. But I think you are right, because I think a data of World Bank have a limit, right? I say in my presentation, I use data of World Bank because it's the all data that I have. And I think also that in developing country, there are another aspect that you have to see, and like a informal entrepreneur and the informal channel for do with me. But now at this level of my work, I don't do by which another data because it's the World Bank. But I note your observation, and I will explore it in my future research, and to improve this study. Thank you.
Thank you very much, Grace, again for that appreciation, and also explaining a little bit about the World Bank data with which you are working. Let me see whether there are any comments in the chat. Meng, do you see any comments on your side of the chat?
No.
Okay. Yeah, I think there were comments about the corporate finance dimensions of remittances, but that's also consistent to what I just explaining. I know for sure that the World Bank did a couple of years ago some surveys, specifically in Kenya, where they were approaching the surveys from the perspective of small companies called Juakari. Those are small and medium enterprises in Kenya called Juakari, which includes artisans. But the approach was slightly different, because for them in that survey, they were looking at the patterns of financing, the capital structure of these firms, looking at how would they raise money, so that they include maybe raising money from relatives, from group lending clubs, and then applying for a small loan from a bank or a provider, or getting cash injections from overseas. That is kind of their measure of kind of remittances. And in a way, they're trying to see the combination of remittances, or part of their capital structure from remittances and other. That's a slightly different type of work, but also one in the stream, in the same strand of literature that you are trying to address, which may provide another added argument in this discussion. Okay, let me go back to see in the chat. If you want to say something, please raise your hand or just unmute. I can say, okay, I can see an intervention from Isof. Isof, please go ahead.
Okay, thank you very much, Victor, for giving this opportunity, actually to Grace, to present her work, and also for the good comments actually she got so far. I just want to come back on few, comment made actually by Dirk and also by Richard. I think these are really great, comments, and then this actually, Grace need, to dig into those ones. First of all, the one, from Dirk actually, on the type of remittances, how the remittances are being generated and so, and also how if there have been any type of initiatives coming from countries actually to try to channel those remittances and so on. I think that will be really interesting. Probably it will be some type of work you have to collect some of the data actually. That won't be easy actually, because you have to look at the initiative by countries, country by country. But if you can have two groups of countries really to see countries where, I mean, they have been really clear, really path, I mean, try to really channel those, I mean, remittances into, I mean, somehow into the economy, into the financial sector. That really, I think that will be really interesting. And then it gets, I mean, to some type of comment, because when I look at, I mean, like the regression, I mean, you are making, I mean, this is really an interesting topics and a timely topic, because as we can see over the last years, we have seen that remittances have been really very important for many developing countries. And at the same time also, we can see it is very stable, I mean, compared to other capital flows. Even during the COVID, if you look at really the drop in the remittances, the drop has been very, very small compared to other type of capital flows. And then we do know that also actually they are more resilient during crisis, and so the remittances actually can help a lot with countries, I mean, during crisis. But the whole question is basically how countries can profit from those remittances to channel them more efficiently into the productive sector, and then mainly, I mean, partly, I mean, through the financial sector actually. Then probably there is also a threshold effect, I mean, in the financial sector, right? I mean, maybe the financial sector actually, it needs actually to have some level of development to be able actually to capture in the right way, I mean, those, I mean, remittances coming in, I mean, actually in those countries. And I can see also that you have a negative relationship somehow, but before even crossing, I mean, the two, I mean, the remittances and financial development. But maybe, I mean, that can be explained also somehow, because if the country doesn't have, I mean, enough quality, I mean, financial development, actually, maybe, I mean, that financial sector, I mean, actually is not contributing in the right direction, actually. But maybe it can be, I mean, a threshold aspect, as I said. The other comment, I mean, like from Richard, I mean, in terms of formality and informality, I mean, really, I mean, really, I mean, and we know that, I mean, there are probably, I mean, for some country, maybe informal one can be even much bigger than the formal one, right? I mean, actually, but it's always, I mean, this question of how to capture and how to measure actually the formal, I mean, the size of the formal, I mean, type of remittances actually. And I think, I mean, if you have any hint, I mean, really you can provide Grace with that actually, or where she can actually look at it, and if there are any source of data she can explore, I think that will be really great. I think it will even add, I mean, much more to the quality of the work, I mean, actually she's doing actually, right? I mean, to be able, I mean, to analyze, I mean, this informality also, I mean, in terms of remittances coming into it. So, and also, I mean, thankful to George, I mean, that bringing us, I mean, really the real case of Uganda actually, I mean, what's going on the ground and so on. That's really great. I mean, I think, I mean, on and on, we do know that, I mean, actually SMEs have really, it's a big constraint for SMEs, I mean, in many of developing countries to get access to financing actually. And we know at the same time that in many of those countries, some of the countries are really, remittances are really a big part of flows coming to those economies actually. But really the question is there really, why, I mean, those remittances, we cannot really use those remittances in a more efficient way to be able to really to contribute, really to strengthen the financial sector and also to strengthen those companies, especially we are talking about small and medium-sized enterprises. Some of the people receiving those remittances probably are some of the people running also those, I mean, SMEs and so on. That's really the whole question, I mean, trying to look at, I mean, with this paper and so on. Really, and I think, I mean, those comments and suggestions also actually will really contribute to improve it, to improve the work and so on. And that's why I mean, really I encourage Grace actually to come and present this work here, right, at this Center for Global Finance, I mean, seminars, because I know that, I mean, actually she will get this type of comments and so on. Also, I'm not talking about the comments, I mean, made by Victor himself, I mean, actually, when sharing it, but all those comments, I mean, put together, I think she will have to go back and then see how to really integrate all this, I mean, the work to make it much better. Okay. Victor, I will stop here.
Thank you so much. I think you have very well summarized all the issues, but also put the comments in a very good context for discussion. In a way, these points emphasize the argument that Grace's current work, interesting, exciting, is not going to stop here. Indeed, it's going to generate a couple of papers in addition to this particular paper. And some of the ideas for extension of this work have already been explored by the comments that were received here, including issues like, okay, let's look at the instruments that are used for remittances. Let us see whether we can distinguish between informal and formal type of remittances. And let us look, for example, see whether future work can be able to see strengthening not only of the financing of SMEs, but also the financial institutions themselves, including microfinance and other facilities that are used to finance the SMEs. So there is a total agenda, and I think this agenda has been very much shaped by your own work, which has excited us to think about these issues much more constructively, but also from the input by academics and practitioners here who have interrogated some of the ways that could be used to extend this work. So I can see a couple of remittances papers, not only your own, which is already polished, but also further extensions in the discussion later on in the year or early next year that focus on remittances. In fact, if one was to do like a global project, a funded project on remittances, your work was already excited on what this would involve. It would involve a number of stakeholders, researchers, of course, doing the research. But of course, it involves practitioners who are looking for funding, governments that innovate in terms of instruments, capital markets that can design bonds, especially say from diaspora, innovations in fintech that can be used for the transmission purposes, real-time transmission of remittances from east of Somalia in Laval in Canada immediately the same afternoon, and a shop is being set up, or a small factory is being set up in Abidjan. Okay, and so thank you very much, Grace, for exciting us into this terrain of remittances, and you can be sure that there's going to be a lot of conversation about this after your end. So maybe what I will do now, let me see if there is any further comments from the floor. It appears we are all converted, so I can give you a minute to say some closing words or closing remarks, and then I will close. Yeah. So over to you, Grace.
Okay, thank you, Professor Victor, and thank you, Professor Issouf, for this opportunity, and thank you for all persons that here and comment my presentation. That I say in the beginning, it is a real pleasure to me to present at this conference, this seminar, please. And I think I have noted all the comment and the contribution, and I will make a modification of my work to improve the result. And I wait also if somebody, I put my email on the first slide. I wait if somebody have another contribution or comment on my work or data or so many things. I will open to have this, and thank you very much, Professor. Thank you again for this opportunity.
We should thank you very much, Grace, for making this day, for sharing your highly interesting work with us. Indeed, it was so clear in presentation. The slides are very well done in LaTeX, and Grace has made this available to Center for Global Finance, and Meng will be sharing copies with you. And I understand now from Grace that on that PowerPoint presentation for this paper, there is the email contact of Grace. In case you get further comments, and of course, I can see quite a number of very prominent researchers and prominent policymakers, prominent people from civil society who may want to make important observations. There are some observations, for example, on the recent rules on remittances that tend to affect the way banks operate. Some of those have been highlighted by civil society. So all the comments definitely will be duly acknowledged in acknowledging the contribution of the work on this seminar, and will be very much appreciated by Grace. And I guess this is the start of interesting papers from Grace. I know that we shall see other papers coming up in due course. So thank you, Grace. Thank you, Isof. Thank you, colleagues from NGEA. I can see Dr. Lewis Randregakpa also in the audience. And thank you, participants from all corners of the world who have put aside this time to join us and to participate in this interesting paper.